All right, so I'm sure all of you guys have heard, and the rumblings are getting louder, that we will have a lost decade in the stock market, maybe even longer. And I'm sorry guys, it's not fake news. We've had them in the past, we will have them in the future, and right now things are lining up perfectly for us to have one again. What does that mean exactly? I mean, how's it all gonna play out? And what's the point in investing if you're just gonna basically throw money into the trash bin for, a decade plus? So we will discuss all that today with facts, not conjecture, not hot takes, not any of the other stuff that's out there. And if you appreciate that, go ahead and make sure you hit that like button and consider subscribing too, as that's the kind of content that I like to do. All right, so let's take a look here at this Nasdaq chart. And as you can see from the height of the tech bubble, it did not recover for 15 years until 2015. Guys, that is 15 years to recover. Can you imagine investing in something and basically going down and not breaking even, not even breaking even for 15 years? That's an incredible amount of time, but you guys knew there was going to be a but here, didn't you? I can tell you right now, I could care less about any of this, and this shows me absolutely nothing. I mean zero. So let's kind of break that down first. The first reason why I don't care about it at all is because I buy individual stocks. I don't buy the Nasdaq. I don't buy the QQQ. I don't care what the Nasdaq does. I care what my individual stocks do. Now we'll talk about index fund investors here in just a second. I promise we'll get to those you guys that like to have an index fund in your portfolio. We'll talk about that too. But right now, for me, individual stocks is what I invest in. And guess what? I bought Apple. It didn't sit flat for 14 years or 15 years. It had over a 17,000% return during that time. And guess what else did great during that time? Amazon did great during that time. And tons of other stocks did great in that time that were part of the Nasdaq that had great runs during that period where the Nasdaq didn't return anything for 15 years. What an index does has absolutely nothing to do with the individual stocks that make up that index. Sure, you had some that continued to crater and stayed down and never went anywhere and still haven't gone anywhere since the year 2000. I know, I bought some great stocks like GE in 2008 and guess what, or 2010 actually, and guess what it hasn't done over that entire time frame? Nothing, it's gone down. I haven't had any gains in that stock during that entire time that I've owned it. It happens with individual stocks too, but those stocks weigh down indexes like the Nasdaq, and especially what made up the Nasdaq. And what makes up the Nasdaq now is completely different than what it was back in 2000. But there was tons of great stocks during that time frame that didn't return zero during that 15-year period. They returned hundreds, if not thousands of percent during that time frame. So as an individual stock investor, what the indexes do honestly doesn't matter one bit. Guess what? During the financial crisis, the bottom of that was March of 2009. And guess what? It took a long time for the market to recover back to where it was at the peak the year prior. But you know what? A lot of other stocks ran well ahead of that recovery and continue to run well ahead of the indexes overall for the past, whatever it's been now, 12, 13, 14 years from then. Great stocks and great companies always tend to decouple from the actual indexes. Sure, they may follow the same pattern, but you'll kind of see the index here, and then you'll see your stock here well above that when you pick a great stock. So to me, as an individual stock picker, it is far more important to pick the right stocks and quality stocks and great stocks than it is to actually get the timing right or any of this other stuff that everybody seems to try to chase, when that's honestly not what matters. What matters is getting the actual stock right in the first place, and then the returns will follow. I am not worried about a lost decade in my portfolio at any given time. It's never happened before in my portfolio, and I doubt very seriously it's ever going to happen during that time. I guess anything could happen. You're right. I shouldn't say never, but the chances are very small that you're going to see that in your portfolio if you're picking individual stocks. Short term, I agree, it's been brutal for a lot of us. However, over the long run, over a 10, 15, 20-year time horizon, you should do really well if you're choosing great stocks. And the second reason why I don't care about this chart at all is because it implies you did absolutely nothing for that 15-year period. And let me explain that a little better. Let's put the chart back up here. Who takes their money, invests their money as a lump sum at the very height of the bubble, basically, and then doesn't do anything for the next 15 years except let it ride? That's the only way that happens. Most people, even though you may have bought that peak, you're probably going to buy as it falls, right? You're going to buy the dip, even though that's not popular anymore. If you bought the dip the entire time, and let's say you spent, we'll say, $5,000, at that peak in 2000, and then you put another $5,000 the next year, and then another $5,000 the next year, and then next year, not all at one time, but just, DCAing over time through this time frame every year, through that 15-year time frame, guess what? You're not break even at the end of that 15-year period. You're up a lot during that time frame because you took your average down so much because you did the right thing, which was continue to invest, which actually corrects the mistake that you made to begin with. The only way you lose and the only way you have a quote unquote lost decade is to basically buy the peak and never buy anything again and just hold it. That's the only way that that happens. And how many people do you know do that? I don't know anybody that bought at the peak of the tech bubble and either didn't average down and continue to buy over the long trend, which is what an investor does. They invest every year. They don't just lump sum one time and YOLO on this and, hey, let me see what happens over the next 15 years. I don't know anybody that does that. They either average down or they sold and then bought back in at a different point in time later, took their loss there and got back into investing later on. They did one of those things. I don't know anybody that just threw the money at the top and just waited 15 years for it to recover. So when I see those narratives and I hear those narratives, I don't know where they're coming from. To me, they make absolutely no sense, and I don't know anybody that would invest that way. In the end, investing is a journey, and that's how you build actual wealth. Very little wealth, and I know it's popular here on YouTube there for a little bit, and I know it worked for a lot of those guys, but very few people just put a lump sum money into a stock, and then all of a sudden 10 years later, it balloons into something big. Your typical investor invests, every year a set amount, whatever they can invest. Obviously, some years you can invest more, some years you invest less. I know for me, some years I'm going heavy into real estate. Last year, I was heavy into stocks because to me, real estate was overpriced and it was going to correct with the Fed raising rates. And I got to wait on that correction. And right now, stocks are still the best place to put my money in for a long-term return on my money. So that's where I'm going to continue to focus my money in. But I have I have a reasonable expectation that, hey, guess what? Stocks are going to run at some point in time, and real estate's going to get cheap as it corrects itself down. How far, I don't know yet, but we'll see as it corrects itself down. My best place to put my money at that stage may be back into real estate again, so I'll buy less stocks. I'll still continually buy each month, but I'll buy less and put more money towards real estate because that's the best place to invest my money at the time. But I still consistently invest every single year. Up year, down year, it doesn't matter. There's always a deal in the stock market somewhere for you to buy, and that's what I'm out there doing, and that's what I'm out there buying. So to me, any narrative of a lost decade or whatever the heck it is, it's completely useless. It's totally useless, not worth your time, not even worth your effort to even think about because it's such a rare occurrence, and I don't know anybody who actually would invest that way in the first place, that it's not even worth your time or your effort to even give it the time of day to listen to. But what about index fund buyers? I mean, doesn't that kind of still leave them kind of in the lurch a little bit? Well, let me be honest here with you guys. No, for the same reasons we just discussed. Unless you were just going to buy, an S&P or a Nasdaq index fund at the very, very peak of the bubble and then not do anything for the next 10, 14, however long, if we have a lost decade, however long the time period is, whether it's 5 years, I guess lost decade would imply 10. But regardless, if it doesn't return good for 5 years or 8 years or 10 years, as long as you're not the guy that just invested up here and then didn't invest continually to DCA your way down, you're going to be just fine. So yeah, for index fund buyers, it's exactly the same. Just continue to DCA into your index funds as you would normally, and over time you will get that return that everybody talks about, that 8 to 10% return on average that you get. You'll hit exactly that and you'll bring that average way down. You won't make zero over a 15-year, 10-year time period unless you just buy the top and just never buy anything in between. That may be what the chart looks like, but it depends upon your buying in between as to what your actual return is over the long run. But I know I just ruined a good fear video or a good article for somebody out there. And hey, I get it, guys. Emotion is how you build an audience. And that's what everybody's trying to build with their articles and with their videos and all that sort of stuff, right? I'm trying to build an audience. And the best way to do that is to evoke emotion out of your audience. It's like science or something. It's proven, it's out there. It's in all the marketing textbooks. That's how you build an audience. And unfortunately, that's probably why I suck at YouTube, because that's not what I'm interested in. I'm interested in taking all the emotion out of your investing so you can invest wisely and smartly and build actual wealth. I'm not interested in trying to get you on this high and then trade here and then move into this and then move into that or whatever the case is. Again, I know that creates emotion, it creates excitement, it creates fear, it creates a lot of different things like that, and that grows an audience, but that's not necessarily what I want to do. I want you to eliminate emotions from your investing altogether. And I know there's probably a way to evoke emotion without, sending people on this crazy roller coaster and such. I'm just not a good content creator, guys, here. I was an investor first, an investor long before I even thought about doing this YouTube thing, much less actually doing it or anything, like decades long before ever doing this sort of thing. So I'm still trying to figure it out here, guys. Maybe one day I'll figure it out there and I'll be able to find that right balance. But I know for you guys, you need to have emotions out of your investing. And until I find that right balance, unfortunately, my YouTube channel probably won't do nearly as good as a lot of other guys. And that's okay too. That's not why I do this sort of thing. But in the end, I want you to be a better investor. And I'm not a content creator. I'm an investor first. So I'm doing the best that I can to get you guys there. So hopefully this video was helpful and made sense. And remember, if you want to take 5 courses for free and have direct access to me, have access to tons of exclusive videos, tons of Q&As that we do all the time, and have, be able to hit me up in the DMs, have the best Discord group in the business, in my opinion, and everything else, make sure you check out the pinned comment down there and see if my group's right for you and see exactly what all you get for the price. I promise, guys, there's nothing out there that has more for less than what our group does. And click this video here if you want to see the 10 most important stocks in 2023, and click here if you want to see exactly what I'm doing during this market. So thanks for watching, and we'll see you in the next one.